Greetings everybody, Sive here with the ForexPeaceArmy.com. Let's take a look again on the gold market. So in general, the setups that we discussed in the recent few sessions have been completed, although it was really the challenge trying to get them, because market shows, as you can see, very impulsive performance. It's very sharp, changing direction, and it really was difficult to come aboard and take the positions in the proper levels. So, for example, yesterday we haven't got the second chance for entry, although we thought that it might be, maybe we will get it, but unfortunately not. So this was only one real chance to take the position with upward performance. But at the same time, it's not the reason to upset with this, because we also have on the back a really big pattern that we discussed yesterday. It's a weekly grabber on the gold. All that market needs to do is just close somewhere inside of this range, not breaking the lows down. If this will happen, we will get this grabber and target will be at least above this area. So this is really good pattern that we could rely on, and actually it could last for 1-2 weeks maybe. This pattern is not alone, so if we take a look at the dollar index, as I told today in Euro currency video, so you can see that here we also have got grabber on the dollar index, and it stands together with gold, so both suggest the weakness of the dollar. It's an additional confirmation on the cross-market analysis that just brings a bit better background and context for possible position taking. So speaking about the gold, if you take a look at the 4-hour time frame chart, unfortunately or fortunately, depending on what positions do you have, the bread button on the daily is mostly done, just because market stands very close to the 618 resistance level, 4140. This is the final destination points, minimum target of the bread bottom, and actually it's mostly completed. Here's was just a real chance to get on the board, either with this engulfing pattern or just with a minor retracement after engulfing later. Although we said yesterday that maybe if we'll get lucky, we could get another retracement, but unfortunately we haven't got it, and the market just moving higher. What we're going to do currently, since market is coming to the 618 resistance level, previous bearish momentum was still strong. And as I said, I not exclude the chances of the same bread body trade on the bearish side from the 618 level now. So if earlier we talked about some minor levels here, but now as market is keep going directly to this level, the pullback here might happen. Unfortunately, we can't call it as a Jordan Napoli bread body just because it's too much levels, too much candles on the distance to the fib level. But it doesn't mean that bearish momentum is not existing anymore. So it still stands in place. It could push price lower to some of the support levels. And taking it all together with the potential bearish grabber on the weekly chart and possible bearish momentum trade, bullish grabber on the weekly chart and bearish momentum trade on the 4 time frame chart, we could get the trading plan and actually suggesting it's a possible retracement to some predefined support levels. So we'll take a look at the hourly chart. There's some levels that we could keep an eye on. Personally, I like the confluence. I'm not sure that we will drop directly to the 46.65 area. But reaching of the confluence around 47.85, 48.26 is quite possible as a result of this bearish momentum down. Some retracement here. And we could think about possible positioning with the big weekly grabber that's now is developing to the upside. Also here, as you can see, will be a kind of the natural support resistance area. So this previous top might be retested. So that into what we have. One pattern is completed. We're waiting for another one and watching for a pullback reaction on resistance level, looking for impact of this existing momentum to the downside, and watching for support levels, making decision on possible entry on the long side later.